So how much money do you need invested to be able to live off of the dividends? Wouldn't it be great? We could all just sit back and collect that dividend check coming in and be able to live off of that over time. So the first thing is, what are dividends? Well, dividends are simply a portion of the profit from companies that they return to the owners of that company. And if you're an investor owning shares, you are a partial owner, therefore you get dividends from a dividend-paying stock or a dividend-paying investment. Yes, the investment may go up in value or down in value over time, but the really nice thing is the dividends per share should stay relatively consistent over time. And when we're talking about dividends, it's kind of like a dairy farmer thinks about their cattle. In other words, they wake up in the morning and they may look across the pasture and say, okay, the cows look fat this morning. Or today, the cows look kind of skinny. But it really doesn't matter whether they're fat or skinny. Really what matters is how much milk they're producing. In a similar fashion, if the stocks are up today or down today, it doesn't matter as much as how much that dividend is that you're receiving per share. So if you're here to figure out how to live off of the dividends on your investment account and you like drinking milk, you should definitely subscribe. It helps me out and we all like drinking milk. So we're going to start out with dividends from a company that we all are probably very familiar with, Coca-Cola. Well, here we are. Coca-Cola today, February 7th, is trading at $60 a share. And over the course of a year, it's going to pay you $1.76 a share. Basically, $1.76 for every $60 you have invested in Coca-Cola. So the percentage of $1.76 divided by the $60 is what we get right down here, dividend yield. So Coca-Cola gives us today a dividend yield of about 2.93%. But the next thing is, well, if you wanted to live, let's say you have income of $40,000 over the course of a year, how much Coca-Cola stock would you have to have in order to receive $40,000 a year of dividend income? Well, it's actually pretty simple. The formula is the amount of money that you want over time, so $40,000 divided by the dividend payout ratio or the dividend yield, so 0.0293. And the answer here is about 1,650,000. So, wow, a lot of money. You'd have to have over $1.5 million just in one individual stock to be able to generate $40,000 of income. That's a meaningful amount. That's probably more than anyone would feel comfortable putting in one individual stock. Probably don't want to put all of your eggs, so to speak, in one basket. You don't want all of those dairy cows in one Coca-Cola stock. That's a bad analogy, but we're trying. So here we go. Our second example is a higher dividend paying stock, AT&T. So here we are, AT&T. Today it's trading at $19.23 a share. And again, the dividend payout ratio is a bit higher at 5.76% today. So it pays a higher dividend. So here again, if we wanted $40,000 of income per year, divide that by 0.0576. And here we get a much smaller number. So the nice thing here is you only need about $695,000 invested in AT&T to be able to generate that $40,000 a year of income. So one of the questions I get a lot is, well, should we just own the highest dividend yielding investments out there? Well, there's a really interesting piece here that looked at investment returns and investment risk over time with dividend payers, dividend growers, dividend cutters. So let's look. Here we go. The S&P 500 index from 1973 to 2021. And the interesting thing is the returns wind up being generally the highest through that period for dividend growers and initiators, or those companies that started paying a dividend. And the risk, the standard deviation, has been lower than other categories through that period. Versus dividend cutters, meaning those companies that stopped paying dividends or lowered paying their dividends, the returns over that period are actually negative. And check out, the risk here is through the roof. So it might be something really you pay attention to. It's not just looking at the highest dividend yield. It's also looking at what types of companies they are. And let's look at the underlying fundamentals. I just didn't want you to rush out and say, okay, let's invest in the highest dividend yielders out there, because that may not be the results that you want. All right, so the next big thing that we address as far as living off of dividends is, does it really have to be dividends? You could say, okay, well, Tyler, it could be capital gains on different investments. It could be interest income off of bonds. So those are the next couple of things we'll look at. So today, if we look as of February 6th, 2023, so yesterday, U.S. aggregate bond index, so the overall bond index of the United States is yielding 4.55%. So if we did that math here, $40,000 divided by 0.0455, you need about $879,000 invested to receive $40,000 of income over time. So over time, you're probably not going to get as much volatility because you're not owning one individual stock, but there may be less opportunities for capital appreciation over time because now we're owning bonds rather than individual stocks. So the really cool thing about municipal bonds generally pay interest that is tax-free. And because it's tax-free, the yield you're going to get is going to be lower than comparable corporate or taxable type bonds. So here we are, 3.67. So let's say $40,000 is our income that we want per year divided by 0.0367. It's roughly $1.1 million that you'll need invested. But keep in mind, the nice thing is the $40,000 of income here comes to you tax-free every year. So before we move on, I want to make sure one thing is clear. Generally, markets can have cyclical effects where dividend-paying stocks look really good for periods of time and then don't look as good for periods of time, sometimes many years. The next big thing we need to cover is, well, is $40,000 enough? Because for you, that might be plenty. That might be more than enough even, depending on your situation. Or you might be looking at this video saying, hey, that isn't even close to enough. I need 3, 4, 5 times that much. Well, I want you to pay attention to income taxes, the big 4-letter word that is budget, and pay attention to expenses. In other words, if you can reduce your expenses, if you can reduce your income tax liability, if you can basically live on a budget and really be mindful about what you're spending, then it becomes that much more easy to live off of the dividends a portfolio or an investment is making. So if you retire and live on $40,000 of income, the other 2 things I really want you to pay attention to are, 1, what are you going to do for health insurance? And 2, how are you going to protect that income over time from inflation, from the value of that $40,000 income eroding your spending power because it stays at 40 versus your cost of living goes up. And then the last major consideration I want you to be mindful of is taxes. Because if you're living on dividend income, you got to pay taxes on that dividend income. So generally, if the dividends are qualified dividends, they're taxed at long-term capital gains rates. Meaning if you're in a low enough income tax bracket, the tax rate is actually 0. If you're in kind of a medium, which is generally married filing jointly above about $117,000, then you're in a 15% income tax bracket. And if you're in the highest tax brackets there are, above about $600,000 married filing jointly, for long-term capital gains at 20%. Please consult with a tax advisor, but understand that if you're planning on living off of your dividend, your interest income, you have to take taxes into consideration. And one final thought, if you hold these investments in retirement accounts, then potentially you would have tax deferred growth and you wouldn't have to be as concerned about the taxation of those dividends over time because they're in tax deferred type accounts. Hey, thanks for watching. I want you to look out over your pasture, whether you have fat cows or skinny cows. I want you to have tons and tons of milk. We'll catch you soon.